Kevin, welcome. How big a deal is this month-to-month rise in available new cars?
Hey, it's great news after dealing with basically a year straight of declining new vehicle inventory. So absolutely great to see. But as you mentioned, there's still a lot of room for growth coming back. And we're still likely going to see continued supply chain issues for the better part of this year.
In fact, you push back your normalization view now to basically we're going to need until the fourth quarter of this year. Is that right? And what does normal look like, by the way?
So the normal says we're going to get back to what we would expect full production to be out of our plans. So it looks like, the initial thought was second half of this year, was hopeful for the third quarter, but it looks like that production might not really pick up until the fourth quarter of this year. However, while those numbers aren't going to be at that full level, they are expected to continue to increase over that time. So hopefully we should be seeing better new vehicle inventory levels here for additional months to come.
So you're focused on that production figure to kind of get back to where we were or where the market ultimately needs to go. Let me ask you the million-dollar question everyone's wondering, Kevin. What's going to happen with prices? Are they going to drop at some point ever or not?
So it's going to be a different balance between new and used prices. But yes, expectations are that prices are going to come down. Now, when that magical date is going to happen keeps, being up for debate. But we, hopefully once we get past this kind of traditionally strong demand season for new and used vehicles with around tax returns, the hope is that we might start to see some vehicle price relief after that time.
So a year from now?
No, so in the next couple of months.
Wow.
So we're in that high tax return season right now, which traditionally leads to some really strong demand for both new and used vehicles. And so that demand should hopefully, as that demand starts to kind of come down, we should see prices decline. We're already starting to see used wholesale prices start to decline as well. So that should hopefully start to make its way through to retail prices here shortly.
I wonder what that's going to mean, though, for consumers, a lot of whom who have bought cars the last couple of years that they don't really want to see prices drop. Not like they're trying to flip them. They're not houses. But I'm just saying, what impact do you expect that to have? And what impact might it have on buyer behavior right now?
So it could be a really good thing, especially with rising interest rates coming into the marketplace. It could hopefully offset some of those rising interest rates, which could put upward pressure on monthly payments for consumers. And additionally, we're not expecting any kind of rapid decline in vehicle prices. This demand is still really high for both new and used vehicles. So while we may see some softening in prices, it's not going to be a sharp decline.
What do you think the auto market looks like a year from today?
It's really kind of an interesting question of how much does vehicle production pick up? New vehicle demand is depressed, I would say, right now, from where it could be if we had full vehicle production and full, inventory out on dealer lots. So expectation is that as new vehicle production picks up, we'll see new vehicle sales recover more quickly than inventory. So we're still going to be in a transition period, likely for the next year.
Shepard Smith here. Thanks for watching CNBC on YouTube.